Welcome to our new episode of Blockrevision. Today, as always, economy view, market outlook. There is the topic also regarding to trade idea, and whatever you find, what have been brought in previous episodes, will be right here. So today, offline episode, I will broadcast this as we are just during Polish holidays. That's why I'm off my office. But as normally, we are running our session. All right. So at first, what is expecting the market this week? So we are awaiting the most important things that will be brought by Fed. Fed minutes might have a reveal inclinations on the size of next rate hike that will be brought on September, and the majority of the market expects that this gauge will be brought to 0.5 points. That's why this relief on the stock market is right now be seen. As of next, we are expecting US retail sales to keep up its level of growth. Right after, we still have the retail earnings to be brought to the market with that renowned names as Walmart and Home Depot on Tuesday. UK economic data, that will be something that also we might have a look at, and rate hikes in New Zealand that may bring a benchmark of what may happen right on in the rest of the world on September or the late August. Right, so that was some of the outlook of what that week may bring to economic calendar. However, the broader spectrum of an issue I will attach at the end of the episode. Right now, let's have a look at the proportion of firms mentioning recession in quarterly earnings calls has risen. So we can find that right in the previous quarters reports, we found that around 18% of companies, just considering the probability of a recession coming up to the economy. Right now, we are just after second consecutive negative GDP rates for US, but by analysts it hasn't been officially announced period of a recession yet, as labor market is still keeping its positive position in terms of initial jobless claims. So right now this proportion is showing that there's still some concern about the things, but not as much as it have been back during this post-corona crisis. So right now we can find that there is a kind of a relief in a smaller companies around US, as such indexes as Russell 2000 has recently broke out of its very important levels, and needless to say, right now that's due to this possible loosening of Fed interest rate hike policy, and also that the sentiment is little by little is returning to markets. So right now we are expecting slower economic growth, but still there is not much bearishness as it was back in June or July. That's why we've seen this rebound. We can find that reverse winds are that what has recently been noted as those stocks that has suffered the most right now becoming the biggest winners, at least for the time of recording. So it's a common phenomenon where we can find that those stocks that have strong fundamentals but suffer the most due to sentimental issues rebounding very fast if this environment is fading out. And that what recently has happened is gradual return of 60-40 portfolio, and also those most shorted stocks right now having its another 5 minutes. All right. In terms of hedge funds that are placing bearish bets before the rally, they have really have confused the right time to put such bets. Right now we can find that many of these hedge funds were trying to short the indexes right before this breakout. But as we can find, whenever there is a kind of a crowded bet against something or for something, that usually means the market should follow the least resistance path, and in that case those least resistance path was the path towards north, and that would have cheated many of market participants. In terms of market outlook, let's have a look at recent index of S&P 500. Maybe if I'd like to put it a little bit closer, we have officially on a kind of strong market price movement has crossed through 40 to hundreds area, where we may admit that we are officially starting to build a structure of higher highs, higher lows. Right now, as you can find, we are shifting from better than expected earnings to better than expected economic data, and that clearly has been positive, as Mr. Hogan said, and I totally agree, so that the sentiment is recovering. However, we are still doubting the possibility of a full recovery yet. On the market, there is still some of the doubt that we still on a kind of that can bounce reaction, where we may still get back to those levels below 4,000 points. Big money selling needed for the big low right now hasn't been found during this slump. However, it's not always the case. US household equity flows versus S&P 500 returns shows that during a recent slump on this the pandemic outbreak, we haven't seen also the outflows of the households, and neither this time. So that might also be the case that there is a kind of a one of the symptoms of an oncoming recession, but without this we still may have some downturn. So that's just another point of view on the situation where we are right now going through. This arithmetic average annual real return of S&P 500 over different periods, showing that recently we've gone through a very robust period on US markets. However, what have happened before is not an indicator of what may be brought to the market yet. So past returns are not indicators of what may be the outcome during next months, as we have probably heard this many brokers motto of recent years. So right now I wouldn't really stick to that what we have performed recently. what performance we've seen recently might be an indicator of what may come next. And even unfortunately, after such robust periods, there might be a bust period possibly yet to happen. I'm not really frighten any of investors. However, it means that you might be very cautious of what you're investing in, because there is very rarely on the market such environment where everything rising as it was back in the second half of 2020. As of next, sentiment had turned as bearish as past bears, and that was the very important indicator of a possible rebound, that we have aligned those levels of 2008 crisis that even hasn't been reached during this corona slump during first quarter of 2020. Right, so right now let's get to crypto outlook, and we have still experiencing the issue of what this tornado cash and how private cryptocurrency may turn out to get. And right now we have noticed that one of the developer of the company has been arrested. So that's kind of a spooky news for all of the crypto investors, as whether it's Zcash, crypto, or Monero, or other cryptocurrencies dedicated on privacy aspects, may suffer the most in the next regulation time. So I'm not afraid of what the outcome of this allegation made by SEC will be, because I really believe that those people that are really entailed into this issue might be eventually interrogated by those entities related to Security Exchange Commission, but I do find that everything get fine, and they will just get into a conclusion that there is no way to really regulate this sector to that extent that that may kill it in any possible way. So there is more yet to come, as many of investors were using Tornado Cash as a platform, and that helped them to convert one crypto to another. And cryptocurrency received by Tornado Cash by source has been brought mainly from DeFi mechanisms. So those investors that were using DeFi might be one of the possible suspects in terms of money laundering issue, but I do find that there will be a very more difficult to brought all of them into a possible charge, rather than that will eventually come into fruition. That's why I would rather expect those investors that were just converting smaller amounts of money, they wouldn't be sick. However, those that were converting bigger, they might, however, been in the spotlight of a chainless issue, and that is in charge of chasing those accounts that have been entailed into those swaps. There is still kind of a tough time around crypto, where many of startups are collapsing, bankrupting, and so on. Right now, crypto evangelist Mark Cuban has found being in trouble, where he engaged his audience into investing in such solutions as Voyager that haven't been regulatory sanctioned, and that have been found with kind of a discouragement of investors that recently found that this company has filed for bankruptcy, and that's why there is more of a I would say anxiety about the future of the industry if those entities such as Mark Cuban are even very poorly informed in which of the crypto startups it's worth it to invest. Anyway, with all this bad news coming to sector, Bitcoin is slowly but surely recovering. Recently, we've seen that institutional are very bearish on Bitcoin, but individuals are buying. Which one is right? I do find that the individuals are a little bit too early to call it another bull rally to begin, but the very decisive point will be this 25k 30ish area for Bitcoin. If we manage to cross 30k, there might be a possible path for another gains and another wave of interest into this type of asset. In terms of market movers, we may find it this week, as I've just outlined. On Tuesday, we have inflation rate from Canada, and there is a forecast of eventually peaking scenario where we might get revert out of this previous 8.1%, and there's expectations that eventually in America, by large, we are ahead. We are just past this worst guidance. In terms of United States, on Tuesday we also have housing starts and building permits that also are indicators of the sentiment around the economy. On Wednesday we have GDP out of the euro area, and right after FOMC minutes that I've mentioned. So retail sales from Great Britain and from Canada will be those events of that events that will close that week. So that's not very important. Maybe economic data yet to be published, but FOMC will be very worth looking at. So in terms of earnings, recently on Friday we have found that the Broadreach has noted similar to previous outcome of earnings season. However, Seabridge Gold has attached much better one. So we are still in this benchmark of those earnings haven't been brought much worse than they were expected. That's why we are seeing this sentiment rebound. In terms of trade idea, I would like to maintain the recent bet that was Ethereum Classic to USDT. I'm just waiting for this one to load up. So right now we are on DXY chart going through a rebound of this recent support. So this is the one of the peak that was expected we will rebound from, and right after we may find another wave of reverting on DXY. With this DXY to eventually revert, we may find another wave of interest on Ethereum Classic to USDT chart. However, there is one problem. We haven't got through the recent peak. That's why I would be a little bit cautious in terms of a further growth. So if you find that Ethereum Classic will rebound out of this area of low 40s, I would expect Ethereum Classic to get for new highs. However, in other circumstances, I would rather expect Ethereum Classic to drop below 40s. So this area will be very decisive for this type of asset, and whether we are rebound of here or otherwise, that will determine my trading decisions. So watch it carefully. Right now I won't make any of specific guidance where Ethereum Classic may go. We are still in a very strong uptrend with a higher chance of getting higher, but this alignment of recent peak is an indicator for me that we are struggling with getting over this 45 area. So summarizing, if we just get down below 40s, there is a great chance to take a short position. Otherwise, I will be still longing if we just get above this 42 and this recent candle, this this big red candle that will possibly get overcome. Right, so that's it in today's episode. Thank you very much for watching, and see you on online version of our episodes tomorrow.